Hi everyone, welcome to the Real Estate Tax Tips channel. My name is Cherry Chen, a chartered professional accountant located in Oakville, Ontario, Canada. And I'm on a mission to become the Google map for hardworking Canadians seeking financial freedom. Today's topic is about trust reporting. A couple weeks ago, the government released the draft legislation to make some changes to the trust reporting rules. And for those of you who are not aware, the government has started this process of implementing a trust reporting legislation since 2021. It did not get implemented until 2023, and the legislation was released in 2023, and it is applicable for year-end December 31st, 2023 onwards. And so accountants from around the country has been trying to wrap our heads around how this trust reporting rules apply. And reportedly, actually based on a Global and Mail article, that accountants and taxpayers have combined spent over $1 billion in compliance in terms of filing and reporting compliance cost overall, only for the CRA to come out and cancel it all for 2023 filing requirement, cancel them all on the last minute, basically the Friday before the deadline. It was a very upsetting situation because we spent so much money, so much effort into learning what it is, and then the client spent the money to do the filing with us or with their other accountants, and then it turned around, CRA says, well, guess what? You don't have to file for this year because we've created such, they didn't say that, but they've created such a confusion in the marketplace. Nobody really knows what's going on. Now fast forward to August, CRA decided, hey, we need to clarify for the sake of Canadians what's happening and what we are going to do for 2024 and onwards. And this is what happened over the summer. They decided to release a bunch of proposed changes to the original trust reporting rule. And now we're going to go through some of the proposed changes and see how it could be applicable to you. Now, but before I dive deeper into the proposed changes, if you like our video, make sure you give us a thumbs up. If you like our channel, like what we're sharing, please support us by hitting the subscribe button below so then you can stay on the latest tax tips. So it also gives me the motivation to continue to produce more useful information for hardworking Canadians. Now with that, let's get started. One of the things that they talk about is essentially eliminating the bare trust requirement, bare trust reporting requirement in 2024. Altogether, there is no trust reporting requirement for 2024 altogether. Now, if the legislation passed, if the draft legislation passed, this means that nobody needs to do any filing for 2023 unless you are a regular trust and you own assets and all these things. If you are bare trust, then you would not need to do the filing. But what is a bare trust? If you're not sure what a bare trust is, it's worthwhile to visit my blog post as well as my previously recorded video about what bare trust is. But to briefly describe what it is, essentially, under common law, or British law, common law, you would be able to separate two types of ownership. One is called legal ownership and the other one is called beneficial ownership. Now, most of the time, the legal ownership and the beneficial ownership equals each other. And so I buy my own primary residence, my name, Cherry Chen, is on title, and I live in the property. I reap the benefit of owning the property and also take on the responsibility of paying all the bills involved. Those two match each other. My name is on it. I get the benefit of living in the property. That equals each other. So most of the time, there is no such thing as beneficial ownership being different from the legal ownership. Now, there are on occasion, or even complicated real estate deal that the legal owner is different from the beneficial owner. So for example, I could go on title with my mom to own a property, but my mom is the true owner of the property because she doesn't want to deal with the hassle of owning a property. So I go to the city to deal with the property tax. I go to the bank to handle all the expense payment. So even though my name is on title and my mom's name could be on title, but the true owner is still my mom. I'm only on title because it makes her life easier. Both names are on title, but the person that's reporting the income and expenses and the true owner and having the benefit of owning the property is my mom, purely my mom. So I'm not involved. She's the only one that's involved. Now, that means the legal ownership is different from the beneficial ownership. And in this scenario, there is a bare trust relationship being created. Now, this type of relationship is exactly what CRA's new legislation wanted to capture. They wanted to know that beyond what the legal owner is, who the real owner of the property is. So they actually wanted to know. And that was a trigger of why we had the original trust reporting requirement to begin with. Step back to this draft legislation, draft proposed changes to the trust reporting legislation. The first proposed change is that they completely waived the trust reporting filing for 2024. So if you have the bare trust relationship altogether, you might be able to avoid issuing the filing. But we don't know yet. This is draft legislation, we don't know. Now, the number two, there are a few changes they also made that I want to show you on screen. In the past, once we have this type of relationship, bare trust relationship, they also have provided some exemption in the original legislation. The first exemption is that if your bare trust relationship owns assets worth $50,000 or less. Now, this bare trust type of relationship could exist if I go on a bank account title with my mom. She has some cash in the bank account, but the reason why I'm on that title is because, again, I'm trying to make her life easier by helping her to deal with the bank. So she and I are joint account owner, at least on paper, but she really controls all the cash. I don't. So in that scenario, we still have a bare trust relationship happening, even though the underlying property is a bank account. Now, if that's the case, and if the bank account has only cash in it, and it is under $50,000, or if the underlying bank account owns publicly traded stock and the value is under $50,000, I do not need to file the bare trust return altogether. I do not need to do that in the past. In the original legislation, one of the requirements to qualify for this exemption is that the underlying asset that's only in the account or in this relationship has to be $50,000 or less. The second criteria is that it has to be cash, GIC, or publicly traded stocks or mutual fund. But that's in the newly legislation proposed changes, as long as the asset is under $50,000, it does not matter what kind of asset it is, you do not need to do any filing requirement. So before, only applicable if your assets under $50,000 is invested in GIC, cash, or publicly traded stock. After, as long as the asset is under $50,000, and it could be any type of assets. Doesn't have to be just cash, publicly traded stock, or mutual fund. So as an example, let's say you own a crypto account, is worth $40,000. Now, under the old rule or the existing legislation before the changes, because crypto is not one of the qualifying assets to get exemption, so you would still need to do the trust reporting, assuming that you own the crypto account and you own it in trust for your corporation. So your corporation is really the true owner of that crypto account. You are really only going on title, owning it in trust for your corporation. So if that's the case, under the old rule, you still have that filing obligation. But under the new rule, it is under $40,000 and it doesn't have any asset requirement to meet, and therefore you meet the exemption criteria, even though the underlying asset is crypto. That means you no longer need to do the filing. Now, the second change is something called, the CRA introduced something called related party trust. Now, what is a related party trust? This is a new thing that is in the new legislation, proposed change. Related party trust essentially is a trust whereby the trustee must be an individual and the beneficiaries are also all individuals, and the trustee and the beneficiaries are related to each other. So essentially family members. So in my particular example, I am on title for my mom's property. I am the trustee. My mom is the beneficiary. So therefore, we are obviously related to each other. We're families. So we're related to each other. We meet that criteria of related party trust. So that's what a related party trust is. Now, we're both individuals as well. So it's worthwhile mentioning that that is also one of the criteria. Now, the proposed changes but basically said that provided that you are in this related party trust relationship, so the beneficiary and the trustee are both individuals and they're related to each other, and the property value is under $250,000, and the underlying asset is cash, GIC, bonds, publicly traded stocks and mutual funds, or any personal use property. As long as it meets these three criteria, you would not need to do trust filing reporting at all. Now, so using my mom's property as an example, I own my mom's rental property, and so we have this related party trust that we established earlier, explained that we meet the criteria of related party trust. Now, it is a rental property that my mom owns. In my example, it's worth $250,000, more than $250,000 in this particular example, and therefore it does not meet this criteria, and therefore I still would need to do the filing for this trust relationship. Now, on the other hand, if my underlying asset is my mom's bank account, now we're both on title. Again, she's the only true owner of the bank account. She reports all the interest and income and everything from that particular account. Now, we are a related party trust, as we established before. Underlying asset is, say, the cash balance in the bank account is $70,000. So it's over that $50,000 threshold that we mentioned before. And now, because it's related party trust, but it is under the $250,000 requirement for exemption for the related party trust. So it meets the related party trust criteria. It meets it's less than $250,000, and it is being held in the form of cash. Therefore, it meets all three exemption criteria. So I do not need to file trust return for my mom's bank account because I'm on the bank account name title. Now, the last change is the personal use real estate. This is a classic example to explain. In the past, if you co-own a property, say with your parents, you are owning it, like I said, to make your parents' life easier. And it is a cottage, or it is a primary residence of your parents. So you co-own it with the parents, and you're just helping them to deal with all the paperwork and all the hassle of owning the property. And they live there, and they are using it as their primary residence. And they just wanted you to be on title to help with handling all the hassle. Under the old rule, you would have the filing obligation as well. You still have to file a trust return. But under the new proposed change, what happened is that for as long as the property is a personal use real estate, so the example would be primary residence is personal use real estate, cottage would be also a personal use real estate. It can be more than $250,000 for as long as it is $250,000 or more and also a personal use real estate. You would be use this particular exemption available to get away from the filing obligation. Essentially, you don't have any filing obligation as long as the legal owners of the property are related individuals. So in my example, my mom and I are related individuals, so we're related to each other, and the property could be designated as the principal residence of a legal owner. So one of us would be using that property as the principal, could assign principal residence exemption on that particular property. Then you would be able to get exempted from the filing obligation. There's no trust reporting filing obligation anymore. Sounds like it's more complicated than before, and it truly is more complicated. They're not making it more straightforward to apply the rules. But with these three changes, it's literally getting a lot more people being exempted from the filing obligation. Now, if you have questions about any of these, make sure you leave it in the comment section below. And also, definitely talk to a professional accountant. If you're not sure if you have the filing requirement, be sure to ask those questions before the end of the year. We're recording this in the early fall, and I would love to have you share your experience or your scenario in the situation below so that we can discuss publicly and see how it could affect you or may not affect you. My biggest conclusion from reading these proposed changes is that it's not easy to read and it's not easy to apply. There's so many navigation left and right everywhere. So be sure to talk to someone who knows your situation and then can advise you accordingly. Now, again, this is proposed changes, and we're not sure when it's going to be legislated, passed into law. We're just preparing this to be effective as soon as possible. That basically concluded our update on this legislation. Until next time, make sure you hit the thumbs up if you like our video. Have a great day.